Hey, good morning, everybody. Welcome to a Wednesday, November 6th, and the election, for all intents and
Yay.
purposes, is over. If you got what you wanted, good for you. Please resist the temptation to take your victory lap all over your friends and family and social media. It should be happy with what you got. If you did not get what you got, well, that's why we do these every 2/4 years, is so you have your say next time around. These things ebb and flow, so life will continue. But out of this, for an investment firm, our strategy. If you take, back to January, it was like we're staying long, we're staying strong. There's not going to be a recession. We made a ton of money there. In July, I said, hey, let's start to take some of the our foot off the gas a little bit. So we went a little conservative. That turned out to be a little bit early, and that was me doing that. I kind of led the team down that road. But anytime we have the event we've been waiting for, right, is now we have to reprice everything. So the Fed is meeting tomorrow, and you know what? The Ankerstar Wealth Investment Advisory Board is meeting tomorrow. Probably the two most important meetings going on in the United States that I know about, anyway. But Mike and I and the other advisors on the team here are taking a hard look at the assumptions we've made. We release those every quarter. Mike walks you through those. Do those still hold? What's changed? What's likely to change? Kind of reassessing everything. And then based off of that, we will have changes to our models, change to some investment theses that are out there, and then move forward from that. But Mike's going to talk to you a little bit about just kind of what's going on in the markets today first. That'll lead off the show. I will talk about Bitcoin, whether you're in it or not, or really understand it. It's higher. It hit new highs last night during the election, so I will talk to that. And then lastly, me personally, where I'm at with my clients is, it's that Thursday, Friday. It's the November, December time of the year where it's really time to have that tough talk about taxes. So I'm just going to barely touch on some tax mitigation strategies that we have, many of which we just learned about this year. So we didn't talk about them last year. They're all advanced. They're all shows of their own. So I'm just touching upon them. So if you hear something that you like, just reach out to me and let's get something on the schedule so I can talk to you in depth. So that's what we have for our show today. It's a financial education presentation. So make sure you do your own due diligence before acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. So, Mike, over to you. What do you want to talk about today? The color green, maybe, since
All
you
right.
have it
Well,
on?
well, my wife gave me a fantastic quote, and she started the day and said, "There's some people that are red, there's some people that are blue, but we all love green." Right?
Go. I like it. Let's go.
I like it. I like
Yeah,
it.
hire her for marketing right now.
Let's bring everybody together. So I figured I'd pick the non-politically based, unbiased, of course, now CNBC, and put this up. The results recap: Trump wins. He won at like 2 a.m. Eastern time. At least that was when Wisconsin was officially set. I think what's most interesting with this, and I'm not going to go through all the details state by state, because if you watched last night, I watched like 6 hours of it. The big thing is the market, I do not believe, initially priced in that the House would go to the Republicans, and that's where it's looking like it is. The Senate was pretty safe as far as in the red. But what this means is, assuming all these results get calculated right and the way things are leaning, is it's a sweep, and therefore that means things can be passed more aggressively. So there's some good and bad to that. So certainly I'll quickly hit on the good things, like the 2025 tax sunsetting that maybe you'll mention, but there's a good chance that'll get extended, where initially that would probably be unlikely. That's a good thing. Another thing is, a lot of reasons why, and I'm going to show you the markets being up, is because there was promises like we'll reduce the corporate tax rate. And that means there's a chance that if the House and the Senate are all aligned, that can happen. So that's why generally everything is up. And there's a few exceptions, which I'll cover. So let me show you the positive. So I'll just grab the S&P 500. Here is a 1-year graph. Here, I'll just go to a year-to-date graph. And you can say S&P 500, there was a couple dips along the way: April, August, September. But for the most part, it's been a straight move up. I mean, very consistent, up 23% plus year to date. And obviously, there's always buying opportunities that we take advantage of during certainly those August and September timeframes. I know we added to some positions. And I'm going to show the NASDAQ, which also looks very similar, new 52-week high. It's closer to its July high, but it's past it now, and it is up 25%. So if I told you on November 6th, as all these predictions of recessions and volatility, and there has been a little bit of volatility, the overall markets are up 23, 24%. You'd say that is a great year. And this is one of the reasons why you don't go back in July when it was up 16%. We go, oh, we're up 16%. Let's go to cash. Then you'd miss out on the rest of this. So overall, markets doing fantastic today. One of the things I saw as a highlight, look at this one, NVIDIA passes Apple. So Jensen Huang, he's celebrating. Maybe Tim Cook's like, But anyways, NVIDIA is up over 3% today. Apple's only up 0.4%. So therefore, NVIDIA passed them as the most valuable company. I did pull up a graph of NVIDIA, tracks pretty much to what you saw in the overall market. When you're the most valuable company, you kind of drive that market. But then I thought I'd show a couple other examples. So maybe you'd say, well, wait, not everything's up. And some of these may be reactions to Trump coming in. So Alibaba, so I had to pull this up. I wanted something that grabs kind of the Chinese trade. So one thing that came up at campaigns a lot is the use of tariffs. And, I guarantee we'll be talking about this next year. But, Trump talked a lot about putting tariffs, an overall tariff, and more on China and things like that. And that's not always a good way to do things. The thought is, hey, if we charge more on tariffs, we can reduce taxes, which of course we all like the reduce taxes part. So here's Alibaba trading down 2.5%, mostly from the election. And then the other thing is you always get this, oil versus clean energy. Elon Musk is his buddy, but he does electric vehicles. So I pulled up one of the clean energy stocks, a solar-based company, off 16% today. Wow. Now, if you look back in history, 2016 to 2020, you'd think, man, oil must have shot through the roof and clean energy got crushed. And then when Biden became president, it flip-flopped. It's actually exactly the opposite of what you would think. Oil didn't do all that much under Trump, and clean energy did great. Now, it was really more due to low interest rates rather than favorable policies. But sometimes when you see a company like Enphase here, and I'm not saying we're adding it to our model, but you say, wow, if I kind of like solar, it's 16% on sale. Now, I mean, so that's as Steve said, we'll be looking for opportunities to invest. And then lastly, since I'm covering these one-off stocks that are not in our models, you got to cover DJT. So this is the Truth Social. I do not have an account, or at least I don't have one that I use. And this thing's been all over. It's really been an indication of how well Trump's doing. So when they're sure he's going to win, it goes up. And when they're not so sure, it goes down. And but overall, when you actually look at the financial fundamentals, I'm not really sure where this thing's going to go from here. It's not like this is going to take over Facebook. Plus, I think Trump's going to have a job that he's probably needs to pay attention to. And he might not be running this company or doing whatever he does with it. He might just keep his name on it. So, not in our book, but I just thought it was interesting because it's up 9%. And if you look at just over the last 5 days, this thing was all over the place, anywhere from down below 30 to above 42. So those are swings of 30 to 40%. There was times it was getting stopped in the market, but just interesting to see. So, going forward, a couple things that I've already listened to some calls this morning, things to think about, tariffs that we'll talk about, taxes and what we do with this 2025 tax policy and going forward. But overall, market's up fantastic. I don't think the market had priced in a sweep. I think they had maybe priced in a little bit of a Trump victory with a mixed Congress. So we're kind of on that sugar high. So with that, I'll turn it back over to you, Steve.
Yeah, a couple things while you have that Trump media stock up there. I get asked about this a lot. And yeah, it's a meme stock, right? It could triple, it could go to zero. I mean, you're not investing really. I mean, that's gambling, right? So do your own thing. I have folks that have insisted on it, so it's in the book against my will. And then it's like you call me and tell me when to sell it because I'm not looking at it. And then also, Mike mentioned the biggest company in the world, NVIDIA. Mike and I are scheduled to have the opportunity to be in the same room with Jensen Wang later or early next year. We're going to go to the Consumer Electronics Show. Obviously, our book is filled with tech, so we're going to go see what the latest and greatest is out there. He's the keynote speaker, right? So we'll be in the same room, and probably not get the opportunity to address our unanswered LinkedIn requests personally. I don't know. If not, I may pull mine. I don't know. I don't know what I feel about that. But all right, you can go ahead and bring that down, Mike. But I will say that one of the best things about this job is to be able to get in the proximity of greatness, right? And you move up the chain. And at Ankerstar Wealth, we just moved up the chain to above 100 million. So now, when we have days like this, our entire book, which is your money, your future, your retirement's moved up, is currently, knock on wood, up over $1 million today already. So it's kind of like it's an amazing responsibility, but with that responsibility, you get access to some folks. And the reason I bring that up is I was on a call Monday when I flew back from Ohio with Rick Edelman and Matt Hogan. Matt is the CIO of Bitwise, and we use BITB for our Bitcoin holdings. Anyhow, both of them were talking through their thoughts on the election. They pretty much called it. Their thoughts on the Bitcoin, what's going to happen, and they pretty much called that. And they said that as soon as we get new highs, which we have today, that it's pretty much going to be a straight shot to 100K. So you're thinking, where's it at right now? Okay, it's 74 and change. Here's the what are we at? 746. If you go down slightly, we did see right there highlighted a 75.3 as an intraday. It doesn't really trade per day, so it's trades all the time, right? So it's the it's 75,000. He said basically, this was Matt Hogan saying there really aren't going to be many sell orders between now and 100K. Maybe when we get closer, right, the traders will start to get out. But your buy and holders, your buy and die type folks, or if you believe, then, there's really no reason to sell here. So your Bitcoin philosophy personally, if you're a client and you say, don't hold it for us, we will honor that. I have 0 people that have said that. But I would honor that, right? If you say just don't hold it, like if you say any company you don't want to hold, it's fine. We can work around that. If you don't know much about it, but you're like, hey, I trust Ankerstar Wealth and their position on this thing, then we're going to position you accordingly. If you're like, I'm a believer, I want to buy more, our job switches to trying to make you so you're not too overweight on this thing, because investing will humble you every now and then, and you can be wrong, even though the thesis is pretty strong out there. I personally believe I'm personally overweight myself. But that's a personal opinion. It has to be right for you. So why Bitcoin? We've talked about it several times, but in Rick Edelman's words, he said it's a hedge against the dollar, which all we've ever known my whole life, my parents' life, anything I can really relate to is the dollar has been the go-to currency in the world. But does that continue because of the other two problems that are out there? The debt that we have, the deficit that's out there, and then servicing that debt is now, our interest payment on our own debt to other countries basically is similar to or exceeds our Defense Department. So those are big problems. So yeah, there's the Trump thing, and maybe he puts it in the Federal Reserve. And yes, there's institutions that in January couldn't hold the ETFs, and they're coming around to it. But ultimately, there's kind of several reasons that are going to be a catalyst for this thing going higher, in my opinion. Again, I could be wrong. Do your own diligence. But I did want to bring that up, and we're not really trimming this. We'll talk tomorrow, but I know one vote will be let's not trim very much here, or if at all, if we can help it to take advantage of this raise higher for you in the models. So, or personally. All right, last thing I want to talk to you about is we are making a ton of money when you have a big up year like this. If you sell anything in a taxable account, you're going to have a capital gains problem. So we're talking about tax mitigation strategies. Again, this is a quick primer. There's a standard there. Standard disclaimer there at the bottom right. There's a longer one here. Pause the video and watch it if you want to read all of that. But this is really all I'm going to talk about of the 28 slides that we have, is if you have gains, do not just eat them without at least talking to us about this, about whether these strategies are right for you. If you kind of skip right to that minimum column, you can see these are no joke minimums, right? So yeah, you do kind of need to be in that 100K of gain zone. So a lot of people, you either have a really big taxable account that you did massive trimming in, or if you trim the Bitcoin position in your taxable account, that could cause a 100K gain, or you sell a business, or you sell a house, right? So those are kind of the big gains. Generally, it should be on your radar scope. Either way, even if you have smaller gains, sometimes these can apply, or you can orchestrate your gains so you take them all at once, so you can take advantage of one of these strategies. Opportunity zones, that's invested, that came out of 2017, the Tax Cut and Jobs Act, which is Trump 1, if you will. A lot of these things, like Mike alluded to earlier, will likely get extended with a red wave. So the fences that are in place now, I think those fences will move out to the right. This will be in place longer. That allows you to defer capital gains, defer the taxes on them, and then once you pay those taxes 3 years later, it grows tax free after that. Direct indexing. We're new to this. It's been around for years. We Ankerstar Wealth are new to this strategy, and we're getting it set up through Schwab. It's a really cheap strategy to be able to follow an index, but also be able to tax loss harvest along the way. That's all I'm going to say, because the questions you would have would be take the rest, take an hour. But I will be happy to talk to you about that. Plus, we will have our expert come out to the building and speak to everybody about this too. Actually, all of these. Donor advised fund. If you're ready to give money away, do not give money away without talking to us or some advisor out there who's smart on tax stuff, right? So if you give it away, get credit for it. That's the important part of that. Same thing with qualified charitable distributions. This is the one we've been doing for years, specifically my parents. They have to take a required minimum distribution every year. It's not 100,000, but it's not nothing. They marry that up to where they just basically give all that money away, right? So they don't have to pay tax on it then. Otherwise, you will. 1031 with 721 conversion, we're off into real estate stuff. But I will tell you that before you sell something, you need to gauge us or an advisor on, hey, how do I need to sell this? Once you sell it, if you take the funds, you can no longer do any 1031. But if you sell the property and you put those funds into escrow, i.e. your little hands have never touched the funds, then you have options. But if you touch the funds, all this goes out the window. So that's why you have to engage early. And last one's a 351 exchange. I have literally been about 4 weeks into this strategy. I honestly did not know it existed, but it's for people who have large stock holdings with a lot of capital gains. Apple held it for 20 years. Raise your hand. Yes, I have. Can I sell it? No, I cannot, right? Because it's almost entirely a capital gain. But there is a way to be able to exchange that into an ETF that tracks an index without just holding the individual stock anymore. That's all I'm going to cover here. So a lot there at the end. Mike, I will hand it over to you because I threw out a ton of stuff there. And before we close, any thoughts on any of this stuff?
Yeah, I'll just say that we always will pay tax. I mean, there's no way that you just pay no tax or on a gain, but there are efficient ways to do it so you pay the least amount of tax that you have to. And that's certainly what we're trying to do. So up into maybe into your young 60s, you're building that account, but later on it's how do I get that money out and pay the least amount of tax? So these are just great methods and very exciting, although complicated. So, several of these are complicated. If it was easy, everyone would do it.
Right. And that, we do make the joke in the industry, and maybe we shouldn't, I don't know, but certainly it's the moving targets of the tax code and all the rules. And we update the IRA contribution limits we move the fence on darn near everything every year, which keeps the entire financial industry employed. But we shall see. But to conclude, okay, you've got basically Trump winning the election. You've got the red wave. Why are the banks up? Why are small caps up? A lot of that's regulations should be loosened, right? We've been kind of we've been increasing the amount of regulation, which kind of slows folks down. We're a small firm, so we're getting ready to register with the SEC, so we have to spend a lot of our brain cells towards that instead of making you money. I got to figure out following the rules on that rightly. So anyhow, so overall, I think it's going to be a positive. And the market's on a sugar high right now. Again, I still have a feeling that, we may sell off from the sugar high once we get into the details of what's actually going to happen during this transition of power. But so far, so good. It does appear to be a peaceful transition of power. And that was really kind of my number one hope out of all of this is that let's just keep the democracy going, whoever's in charge, right? We got a good thing here. With that, I'm going to let you go, and we will see you back tomorrow. You have a good one. Bye.